Welcome back, ladies and gentlemen. Butcher Wall Street here. I'm going to wait for everyone to get a chance to join in. We're going to play a little game. Argos Reed, you are actually first. That is correct. Welcome. I'm going to put up a little poll. We're going to start here. We're going to start a little poll here for fun. Let's see if we can do that. Let's play a little game here. Don't answer if you know the answer. But if you haven't already seen this, let me know how much you think this building sold for. If you already saw this, for example, like on my Twitter or somebody else's, don't give the answer. But it's pinned to the top. This 332 million. Pump up the volume. Are you fucking kidding me? The volume's loud as shit. $332 million building sold at auction on August 1st. Today. Let me know how much you think it sold for. That's 23 floors, office building located in Midtown Manhattan.
Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey. Got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused.
Ladies and gentlemen, welcome. I'm the Butcher Wall Street. I'm coming to you live today on Twitter, YouTube, Rumble, and TikTok for the first time. TikTok. So we're going to talk a lot about real estate, financial markets, the stock market, bonds, even fiat currencies. A lot of people think the US dollar is safe. They think the euro is safe. And let's just say it's not the case. Let me know your guesses, guys. Let me know your guess as to what you think this thing sold for. Check out this building. It's a 23-story building that sold at auction today from Midtown Manhattan. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these. Welcome, ladies and gentlemen. Zachary, no, I'm not streaming on TikTok for people to download it. I'm streaming it for all of the people that don't have Twitter, YouTube, Rumble, etc. But this building sold today. Cause I'm screaming fucking hand down, I ain't searching for breaks, but I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking, give people a chance to join real quick. Now it's time for these apologies, the time is Yeah, this was a $332 million office building. Well, it was. Today it sold at auction, 23 floors, located at 135 West 50th Street in Midtown Manhattan. Drop a comment, let me know what your guess was. As soon as this song's over, I'll tell you guys.
You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers and I smoke through.
You guys ready?
About all the shit that I've been through. You don't know all the shit that I've been through. All the pain and the
On August 1st, this 23-floor office building that originally was $332 million sold for a 97.5% discount. It sold today for $8.5 million at online auction. This is a massive, massive loss of 97.5% to the bank that owned this thing. This is a huge decrease in value compared to the 2006 selling price of $332 million. This building was only 35% occupied. In case you didn't see it, check it out. This was listed alongside strip malls, motels, apartment buildings on 10X, which is a real estate auction site. And it reflects the challenges faced by the office market in New York City, particularly in the wake of the pandemic and the shift towards hybrid models. Shout out to Evan Kirstel on X for pointing this out. This is what we're looking at, folks. The signs of recession are everywhere if you just know where to look. This is the stock market today. This is the stock market today. How's it look today? There was $1.2 trillion wiped off the face of the earth today. $1.2 trillion was lost. And that even accounts for the 5% gain in Facebook stock Meta. So even though Meta was up 5% today, across the entirety of the rest of the market, there was $1.2 trillion wiped out. And across Nvidia alone, well, my friends, Nvidia lost over $400 billion because it's a massive bubble. There was a $400 billion loss earlier today. It ended up being $1.2 trillion. The Magnificent Seven alone combined for $700 billion of losses in market cap today, which is absolutely massive. This easily signifies that large cap tech stocks, the Magnificent Seven, Apple, Microsoft, Nvidia, Google, Meta, Amazon, have erased most of their gains since yesterday, and even small caps are down 3.5%. During a recession, we are definitely going to see these fall even further. U.S. job openings today declined to 8.1 million in June, down from 8.2 million last month, and are near the lowest level we've seen since 2021. And since last year, job openings have fallen by over 10%. This is the 23rd month in a row where we have seen decreases in job openings. 23 months in a row, almost 2 years. That's the longest streak that we have seen in job losses since 2008 financial crisis. Private sector hiring declined 3.7% to the lowest level since the scamdemic, April 2020. The people quitting their jobs, people who voluntarily left their jobs, fell to 2.3%, the lowest since August of 2020. Obviously, Americans are not confident that they'll be able to find a new job since the 2020 scamdemic, as the labor market continues to weaken. We are seeing all-time highs on the price of gold. Gold today reached $2,500 per ounce in the pre-market session, and it shows a flight to better assets, to safer assets. A lot of people, a lot of institutions are getting out of the stock market, out of bonds, and moving into precious metals like silver and gold. And rightfully so. I think they absolutely should be. Snapchat stock today fell 22%. 22%. They reported second quarter earnings results, and they're down 30% today, including after hours and regular hours trading. 1/3, 33% of the entire value of Snapchat has been erased today alone. Just for those of you that missed it, here's the chart on gold. Gold greatly beating the returns on the S&P 500 for the year. 18.51% increase. The stock market today. $1.2 trillion wiped out. $400 billion wiped out from the Magnificent Seven stocks, the top 7 tech stocks alone. A $332 million office building from 2006 sold today for a 97.5% discount for $8.5 million in Midtown Manhattan. The Dow Jones, according to the Kobesai letter, is down 1,000 points from the highs that it saw this morning. This is the largest daily drop of the entire year. Ten-year Treasury bond, the 10-year note, dropped below 4% for the first time since February of this year. And the markets are beginning to finally price in a recession. Even though the Biden administration wants everyone to believe that there is no recession, without a question there is. This happened immediately after the July Federal Reserve FOMC meeting and the manufacturing data that came out much weaker than expected. The manufacturing data in China and in the United States both underdelivered massively. Over the last 5 days, the 10-year note yield is down over 30 basis points, from 4.3% to 3.97%. And bond markets are all in on rate cuts, says the Kobesai letter, and I have to agree with them. There's a reason we follow each other here on X. I don't know them personally, but I know that a lot of the information they post is very good, and I have a feeling that they feel the same way about the information that we share here as well. On this channel, we've had interviews and discussions with PhD economists, chief executive officers, a variety of different businesses, precious metals dealers. And we've been calling this out for a couple of years now. Because if you find out after the fact, it's way too late. Intel today cut its dividend to 0. And they are cutting 19,650 jobs. Their stock plummeted more than 10%. Recession. It's been here for a long time. And the fact of the matter is, guys, I know a lot of people don't want to believe this, but with rate cuts comes inflation. The more you cut rates, the more inflation goes up. Check this out. Look at this graph on my screen. The purple line, or blue line, let's call it the blue line, is the total number of rate cuts around the world. You know, Europe, America, whatever, different countries, Africa even, you know, South America. When rate cuts are down, inflation, which is the black line, goes down. That's PMI. That's the Producer Manufacturing Index. That's the cost of creating goods and services. So the cost to make goods goes down when rate cuts are down. And as you can see here, when rate cuts go up, what happens to inflation, to the cost of goods, to the cost of manufacturing goods and buying them? When the blue line goes up, the black line follows. Inflation follows. And we're about to talk about Japan and the Japanese yen next, because it's closely correlated to what's happening now in the stock markets. And it's got direct correlation to what we're seeing right now. So as you can see here, look at the blue line at the end. It's much, much higher because Europe and other, not all of Europe, right, but a variety of countries in Europe have already started to cut rates. Central banks are cutting rates, and now we have the Federal Reserve talking about cutting rates. And as you guys watched the last video I just posted on all the social medias, it was directly related to the Federal Reserve's BTFP, the Bank Term Funding Program, and the reverse repurchase operations, the repo operations. It sounds like I'm speaking Chinese. Basically, no. That things are not looking good for liquidity in financial markets. And the Federal Reserve should not cut rates. But there's a very good chance that they will, specifically because it benefits the Federal Reserve and the central banks, JP Morgan and BlackRock and all these other firms. It does not benefit the 99% like you or me or our children for cut rates to be cut right now. Even though I know people are like, I want to buy a house, I want to buy a car, mortgage rates are too high, automobile loan rates are too high. They have to be. Because if they reduce the rates, inflation will go up even higher. And if you can tell me that your grocery prices and your auto insurance prices and everything else related to it, your utilities, the cost of water, natural gas, oil and gas for your vehicle, electricity for your cars, is not significantly higher than it was, you're one of the very, very few. So as I said yesterday in my live stream, this is a Lehman Brothers situation. Lehman Brothers took $50 billion worth of bonds and used the BTFP, the Bank Term Funding Program, through the Federal Reserve to gain double that amount in toxic leverage. And then, of course, everyone thought everything was fine because their balance sheet looked okay because they were able to receive these BTFP loans at par value. When in reality, they were withholding the actual unrealized losses on these. And today, we don't have Lehman Brothers with $50 billion worth in unrealized losses. Just talking about the BTFP alone, banks used $85 billion in bonds that have lost over 50% of their value to gain $170 billion of fair value assets, loans. The majority of this is invested in toxic financial derivatives by these banks. And as I said before, the definition of the word imminent is subjective. For some people, the word imminent means immediately, right? Because it is upcoming in the near-term future. But when we're talking financial markets, we're talking corrections of real estate and stocks and bonds and all of the other bubbles that we're currently seeing, this is something that takes many months, if not years, to play out. And we saw the beginnings of it finally start to rear their ugly head during 2020 when the scamdemic occurred, shutdowns. And in order to prevent that from happening, the Federal Reserve pumped hundreds of billions and trillions of dollars into financial markets artificially. The Federal Reserve printed 40% of all dollars that are currently in existence in the last 2 years. Well, basically since 2020. So that's more like 45% of all dollars. That has turned the US dollar into this. Fucking toilet paper. Toilet paper. Pretty soon people are going to be burning this shit to heat their homes because it's going to be cheaper than actually running the heat. Or this is going to be in the fireplace for a lot of people. And unfortunately, a lot of people, many people don't realize that their 401ks, their IRAs, thrift savings plans, HSAs even, are at great risk. You know, pension plans, 401k plans, all of this is held, especially if you don't directly invest it yourself. But if you have a firm like Vanguard or BlackRock, Prudential or Principal handling your investment, you don't know where they're putting that money. This is Lehman Brothers on steroids. Margin calls are imminent. A correction is absolutely imminent in financial markets. And it's not going to be an overnight thing. This is going to be something that takes a significant period of time. And I got to explain something to you guys. Amazon stock today fell over 6% after reporting weaker than expected revenue for the last quarter. There goes a few $100 billion right there. Nvidia broke the all-time record for the most market cap added by a stock in a single day, adding over $330 billion a few weeks ago. Today, the stock erased over $270 billion of market cap since the high that it saw this morning. That's a $600 billion swing. It is clear that large cap tech stocks will get absolutely crushed in a recession. Absolutely clear. Remember, $1.2 trillion was lost in the stock market today. Of that, $400 billion was in the top 7 stocks. Those top 7 stocks, the Magnificent Seven, account for almost 36% of the entire value of the S&P 500. Now let me explain something to you guys. This is directly correlated to the Japanese yen. There's something called the Japanese yen carry trade. It's also known as the yen carry trade. Right? This is basically a financial strategy that involves borrowing money in the form of Japanese yen, right? It's their dollar. Has very low interest rates because Japan has kept their interest rates low because they have no choice. And they're using that money to invest in other currencies or other assets, stocks, bonds, etc., that offer higher interest rate returns. It's like borrowing money from your friend who has a really low interest rate and then investing that money in a high yield savings account, right, which we could call the Bank Term Funding Program, the Reverse Repurchase Program through the Fed. You can then pocket that difference between the interest rates, and as long as the exchange rates don't really change that much, you make a profit. So the Japanese yen carry trade became really popular because the Bank of Japan kept interest rates low for a long time, making it really cheap to borrow their dollar, the yen. So investors then exchange it for other currencies like the US dollar, the euro, which have higher interest rates, and invest in those currencies. But there's a lot of risk here. So the rate between the yen and these other currency changes, and it wipes out the profits and sometimes even leads to losses. So if the yen appreciates, goes up in value against the other currency, like this fucking toilet paper we have here, the investors have to pay back more yen to repay the loan, erasing any profits that they originally had. So this has a massive impact on financial markets when many people are doing these. Investors, mainly institutions, banks and shit, money market funds, mutual funds, BlackRock, Vanguard, etc., even market makers. This drives up their prices, leads to a sudden reversal if investors decide to unwind their carry trades, and causes those prices to fall. So you can see here, just Dario CPX has been alerting us on Twitter for a significant period of time regarding the Nikkei and the Japanese yen and the Bank of Japan intervention that's occurring there. Because much in the way that the United States has something called the Plunge Protection Team, which is basically led by the United States Secretary of Treasury, Janet Yellen, and her right-hand man, Gary Gensler, they use the Plunge Protection Team, which is tens of billions, if not hundreds of billions of dollars in money printed out of thin air that taxpayers have to pay back to automatically prop up financial markets. They do this by selling naked shorts on the volatility index, the VIX. This causes high-frequency traders and institutions to go out and buy the S&P 500 or the SPY and anything within it, really, the SPY ETF or other things like the Magnificent Seven. Basically, they're creating a gamma ramp, a gamma squeeze. The Plunge Protection Team in the United States creates a gamma squeeze on the S&P 500 through naked shorting of the VIX. That means selling shares of the VIX that they don't have, and high-frequency traders then have to hedge themselves against losses by buying up the SPY. The Bank of Japan has been doing the exact same thing with the yen, and the United States knows all about it. So, 30 minutes after the United States stock market opened today, there was major liquidations from the Japanese yen carry trade unwinding. It's like someone pulled the plug on a giant bathtub and all the water, or money, right? All this money that was in this bathtub just started swirling down the drain. So basically, the Institute for Supply Management, the United States Institute for Supply Management, the ISM, released their report today, which is a key economic indicator that measures the level of business activity in the manufacturing sector. And we found that manufacturing is down big time. Guess what? It came out 30 minutes after the United States stock market opened. Just like the liquidations from the Japanese yen carry trade unwinding came out 30 minutes before the stock market closed yesterday. Is that a coincidence? Absolutely not. So, but wait, there's more. Trust me. So earlier today, there was major liquidations in Japan, causing the Japanese yen to slice through these key levels. It was basically like a hot knife through butter. Just cut right through it. And then the selling spreads to Europe, like a financial plague, basically, when this opens up. And it's a domino effect, but it's with money instead of with little wooden dominoes. So some people will try to spin a narrative about what's going on, like a team of financial storytellers trying to make sense of the chaos. But the real story is different. And it's possible that what we're seeing is actually leverage unwinding, which is basically a fancy way of saying that people are selling off their investments to cover their losses. These are financial runs. The financial runs are imminent. The margin calls are imminent. And we're just getting started. This unwinding started in Tokyo yesterday, continued throughout Europe, and continued throughout the United States. It's a financial tsunami. And it's nowhere near from over. This is just a symptom of what's actually going to happen to a greater extent in the near future. Do me a favor, if you learned something, like the stream. If you learned a lot, share it with somebody that could learn as well. Because I'm not doing this because I got time to kill. I'm doing this because I think that retail investors deserve to be educated. People need to be able to protect their assets, protect their investments, their pensions, their homes, their cars, their jobs. And I'm not a financial advisor, and none of this is financial advice. But you should take the information, go do some due diligence on it, and learn for yourself. Because I'm not just pulling this information out of thin air. This is thousands and thousands of hours of due diligence over years. I've been trading in markets for over 20 years. For the last 2 decades. And I have extreme amounts of knowledge in the business sector as the founder and chief executive officer of a variety of 7- and 8-figure companies that I've started over the years. And I've been researching these things for decades because I wanted to learn which way the markets were going to move and make sure that my investments in business were being done in a smart and intelligent way to prepare for the future. So the Bank of Japan broke something important in the markets. it's a giant Jenga tower. It's a financial Jenga tower that's about to come crashing down. And they're taking out the pieces from this Jenga tower one by one. And that's what we're seeing right now. So the Bank of Japan tried to keep the stock market pumped. The United States tried to keep their stock market pumped until the United States elections here in November. But it looks like they've gone a bit too far. And it's like they're trying to put the toothpaste back into the tube. It doesn't work out very well, does it? And it's already spilled all over the counter. And pretty soon it's going to spill out onto the floor. So if you're a retail investor, you want to keep your eyes peeled and your financial seatbelts fastened. This is like an amusement park ride, but with much higher stakes and less cotton candy. Let's put it that way. Freak Dealing asks when margin calls are expected. My friend, if you guys didn't notice today, the market was falling apart, and then heavily shorted equities like gold and even AMC stock was pumping up this morning. You know, gold reached new all-time highs today. AMC stock was up 6% as the S&P 500 and everything within it was crashing. You know, they may have already started, and we just don't know it yet because that's not exactly news that is public. Does that make sense? They don't come out and say, oh, we've been margin called. The only time people find out that someone's been margin called is if there's a situation like there was with AMC and GameStop and the SLV silver ETF and COS and the other stocks that were halted and made position close only by dozens of stock brokerage firms back in January of 2021. And there's a reality that this could probably happen again. There's a reality that it probably will happen again at some point. So at the same time, people need to be prepared and watch and see what they can possibly do to hedge themselves. It's good to have money in real estate, the S&P, the SPY ETF, and others, but it's also good to have money in things that do well during times of financial crisis, like silver, gold, heavily shorted equities. You guys remember what happened to Volkswagen in 2008? 2008, September, the stock market had its worst day ever. The S&P 500, the SPY ETF, lost, almost 11% of it, 13% of all its value in one day. And exactly 30 days later, with 55% ownership through Porsche, Volkswagen stock rose from $30 a share to $1,000 a share, almost exactly 30 days later. It's very similar to what we could see with heavily shorted equities like AMC and GameStop, right? We've seen it happen in the past. When firms lose a lot of money, heavily shorted stocks like Hycroft Mining Corporation, COS, the SLV ETF, PSLV, etc., start to skyrocket. We saw AMC and GameStop go up 2,000% multiple occasions. Even a few weeks ago, we saw GameStop rise from $10 to $80 a share. AMC rise from $2 to $11 a share. And they're nowhere near where those stocks are actually valued. The fundamental and technical value of silver, gold, GameStop, AMC, and many other heavily shorted equities is much greater than their current prices. Much, much greater. So again, I'm not a financial advisor and this is not financial advice, but keeping your money invested in the US dollar is probably not the best idea. If you guys were watching this channel for the last year, You guys remember when I was telling people that I was buying silver at $17 and $18 an ounce? Well, right now, silver's at $28 an ounce. And a few weeks ago, it was at $32 an ounce. And we've seen silver as high as almost $50 an ounce on multiple occasions now. Gold as well just reached new all-time highs of just shy of $2,500 an ounce. So you know what, ladies and gentlemen? I think I'm going to let you think about that and share this video with your family and friends before it gets too long, because I don't want it to get too overinflated. Lego Pickle Snake, cheers, my friend, on TikTok. We're going to be so fucking rich if you know how to be properly hedged. Look at Big Lots. Their stock was at $70 a share last year. It's at $1. They're filing for bankruptcy and closing hundreds of stores around the country. It's just more of the same. Giles wants me to say, we're going to be so fucking rich. Yeah, my friends. Make sure you're properly hedged. Cheers. This is my first stream on TikTok, so if you're watching on Twitter and YouTube right now or Rumble, do me a favor, go to TikTok, find me there, Butcher Wall Street, at BossBlunts1, just like everywhere else, and drop me a follow so that we can increase our follower count there, so we can share this information with more people. That's the point. That's the whole fucking point, is to educate people on what's actually happening in our corrupt government and our corrupt financial system so that you can help yourselves. That is part of why in September of 2021, after seeing everything that was going down with AMC and GameStop, SLV, PSLV, COS, OCGN, MMAT, MMTLP, etc., we decided that we can't continue to let these companies route orders through dark pools. And by companies, I mean market makers. Because the market makers buy your orders from Robinhood, Webull, IBKR, Charles Schwab. They buy them using payment for order flow from these companies, your orders. Then the market maker can then use their hedge fund to front run your trade and route your order through a dark pool, along with millions and millions of other orders. And it takes a nice big chunk of change, and it collapses all of these dollars into one tiny little ball, an order, and dumps it through the dark pool. So what would be hundreds of thousands or millions or hundreds, tens of millions of dollars in trades going through a specific stock, they crush it up, make it as small as possible, route it through their dark pool, sometimes taking as much as 21 to 28 days. And it's as if that dollar had never even hit the national best bid and offer. It is a fraction of a fraction of a fraction of a penny when it started off as $1. That is how market makers and stockbroker dealers, crypto dealers, etc., manipulate markets. I'll talk about tokenized securities on the next stream. Tokenized securities are another scam used by cryptocurrencies and stockbroker dealers, family offices, hedge funds, market makers, prime brokerages, banks, etc., in order to artificially manipulate the stock market. And I'll get in that further more. And same with crypto markets. So we decided to create an upcoming broker-dealer, a stock brokerage firm called Lit Exchange. Exchange doesn't have an E at the beginning. LitExchange.com with no E at the beginning of exchange. We're not currently a broker-dealer. We've been working on it since September of 2021 in order to bring you guys the world's first stock and crypto broker that routes orders exclusively through lit markets, lit exchanges, to avoid the dark pools and avoid the payment for order flow through these price distorting dark pools as much as humanly possible. Of course, we will give people the opportunity, should they choose to do so, to have their orders routed to dark pools. But again, we're doing something here to make a real change in financial markets, because this isn't just about complaining and crying and bitching and moaning about what to do about it. It's coming up with actual solutions, real world solutions to change financial markets for the better in the long term. Because you can hear my kids in the background. I got 4 girls. And they deserve better.